thing that's driving gold, the relationship between gold and the dollar, is fear abroad of Donald Trump getting in and the uncertainty that that's likely to create. The deep state has tried to arrange the world through triggering debt crises, through regime change, through getting rid of people they don't like. We're not going to stick just to fiat. What we will do is we will also accumulate monetary metals. And, part of the answer probably is that the Russian gold mines can't get the stuff out of the ground fast enough in order to satisfy the Reserve Bank's demand for gold.
In today's episode, Alasdair Macleod sees gold and silver as crucial hedges against the declining value of traditional currencies, particularly the U.S. dollar. He argues that while recent price rises in these metals make headlines, they actually reflect a steady erosion in the purchasing power of fiat currencies driven by inflation and excessive debt. For Macleod, gold and silver hold intrinsic value that isn't dependent on government creditworthiness, making them safer assets in uncertain times. Macleod is especially concerned about the vast debt burden in the U.S., which he believes has trapped the economy in a cycle of needing ever more debt just to sustain growth. With little political will to address this, he sees traditional fiat investments as increasingly risky, making precious metals more appealing as stable real money. He also highlights the efforts of Brics nations to reduce dependence on the dollar, potentially even moving toward a gold-backed alternative. This shift, he suggests, could accelerate the dollar's decline and reshape the global financial system toward a multi-currency world. Looking ahead, Macleod anticipates that as demand for gold and silver grows, especially in the East, their prices could continue rising. He sees this moment as critical for investors to consider the enduring value of precious metals, viewing them as essential stores of wealth in a volatile economic landscape. Now we'll show you the best clips of the latest Macleod interview with As Good as Gold Australia. But first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
It would drive the price higher. But I think we've got to look at the motives of the Reserve Bank. I can see two reasons why they would do this. The first is that in the longer term, however that is, whether that's 1 month or 10 years, they probably see the need for coinage. So they would need to acquire. I mean, you could either do it as a central bank reserve asset or something part of a wealth fund or whatever. But they would need to acquire stocks of silver in order to be able to do that. So I think that's one thing we ought to bear in mind. I think the other thing is one of the problems that the Reserve Bank actually faces, and that is being banned, if you like, from owning fiat currencies by us. So she can't even put, if you like, currency, her own reserves. She can't actually get her own reserves up, by increasing dollars, increasing euros, or whatever it might be. I mean, she's probably got enough Chinese yuan that she might be comfortable with. And I think, therefore, that she's probably doing what we're all doing here. I mean, the three of us, not understood, if you like, by the majority of people, thinking, well, we're not going to stick just to fiat. What we will do is we will also accumulate monetary metals. And, part of the answer probably is that the Russian gold mines can't get the stuff out of the ground fast enough in order to satisfy the Reserve Bank's demand for gold. So I think there are a number of reasons that are probably specific to the central bank of Russia, rather than, let's say, necessarily the beginning of a trend of other central banks deciding to go and buy silver. I mean, I wouldn't rule other central banks buying silver out. I wouldn't rule that out. But I think the Russian central bank is in this rather peculiar position of really not being able to pad out her reserves with fiat currencies. The Silver Institute reckons there's been a supply deficit for the last 4 years. I mean, and the people in the industry, or like in the LBMA or whatever, will say that, there's plenty of above ground stocks, in the form of, held by investors and strategic funds and all the rest of it. So that, there isn't really a shortage. Those will be drawn down on. But, the problem you have with that sort of approach is that, investors and holders of stocks in reserve, they can see that this is a situation where, if they let stuff out, they're not going to get it back. So what do? You just hang on to it even more tightly.
In today's news recap, Bitcoin and gold both win if Trump secures election, says JP Morgan. Analysts at the top bank think traders are feeling uncertain about the market, and this could further benefit Bitcoin. Gold is rising, and so is Bitcoin. And both are poised to continue seeing gains in the weeks to come, thanks to geopolitical uncertainty, worries over the strength of the dollar, and the upcoming U.S. election, according to JP Morgan analysts. In a Thursday report, analysts at the bank said that a debasement trade is coming, which could further drive demand for both gold and Bitcoin and help push up prices. A Donald Trump victory next week in the U.S. presidential election increases the likelihood of such a trade, JP Morgan analysts said. A debasement trade is when traders try to hedge against weakening currencies, geopolitical headwinds, and government deficits. Gold is typically a good insurance policy against weakened fiat money. Top asset manager BlackRock has also touted Bitcoin's so-called digital gold as another asset to invest in during times of uncertainty. Rising geopolitical tensions and the coming U.S. election are likely to reinforce what some investors call the debasement trade, thus favoring both gold and Bitcoin. The report read, Republican nominee Donald Trump not only has come out as the crypto-friendly candidate in the race, but his policy to increase tariffs could lead to more inflation and geopolitical tensions. The report noted, the real estate mogul said he wants all future Bitcoin to be mined in the U.S. and also launched a decentralized finance DeFi project running on Ethereum that plans to release its own stablecoin, Decrypt previously reported. Gold has this year hit new highs, and Bitcoin is now just 5% off, touching its March all-time high. The biggest digital coin is trading for $70,114, CoinGecko data shows, after nearly setting a new all-time high on Tuesday. Now we'll show you more clips, but first smash the subscribe button and hit the like button, as more people need to know this. Let's get back into the episode.
Well, the first thing, there's absolutely nothing on the money front. They were saying basically there were two things that perhaps we were looking for. One was a trade settlement currency of some sort. Now that has been effectively ruled out. And that's realistic because you have to come up with something which is better than the dollar which you're replacing. Otherwise, people won't use it. It's as simple as that. And that really needs you to have something which is gold backed. And I'm not sure that that would ever make the cut with with the existing Brics membership, particularly with India being very much against it.
Yeah.
So that's the first thing. But also, while we're talking about currencies, the overall political background was one of extreme nervousness on two levels. Firstly, with China and Russia concerned about not provoking America unnecessarily. America, from China's point of view, she's always had the strategy of let your opponent make all the mistakes. And the Russians have been doing this brilliantly as far as the Chinese are concerned. So, just let them carry on making the mistakes. Don't suddenly sort of get aggressive and, get them to sort of suddenly wake up and think, hold on, we've got a better way of dealing with this. So that's on that level. The other level of nervousness are amongst Brics nations, the other nations that attended who are looking to join. And their nervousness is that America, could well boomerang back on their trade, or if they owed dollars, and most of them owed dollars big time, which maybe to the IMF. But I mean, the thing is that the IMF is controlled by the Americans. The Americans can call in the shots. So, you don't want to upset your bank manager, as it were. And on top of that, of course, you get, those Americans are not above creating regime change in foreign nations. So, there's a lot of nervousness about how this would be approached. So you can see that while some people are getting quite excited about the whole thing, they're beginning to see a bigger picture and thinking is immediately going to happen. No, this is something which, as far as China and Russia are concerned, is likely to take some time. They're going to respond to events, not create them. And the other thing, which is very interesting, so that deals with the money side. They are continuing to work, incidentally, on having a sort of SWIFT alternatives, and all the bells and whistles that are required for that, and the ability for banks to settle in currencies with each other without using the dollar, still a work in progress, etc. So that's all rather boring. The other thing, which I don't think has been really noted, is that they have created a new class of membership, which they now call partner status. We might call it association, an associate member of Brics, but this is, they call it partner, which is exactly the same thing. It means that all these new countries can gradually sort of, assimilate themselves into a sort of common Brics approach, if you like, to trade. And it's huge, great free trade area is really what it boils down to. And importantly, the nations which we haven't had an official announcement so far as I can see, but there was a list leaked, and they're talking about Indonesia, huge country in terms of population and GDP, talking about Malaysia, they're talking about Thailand, and they're talking about Vietnam. So, that the whole, well, not the whole of, but the majority of the people in Southeast Asia, particularly with, let's say, ethnic links into China, will be joining in partnerships, in partner status. Other ones which are interesting are Turkey, which is already, as we know, a member of NATO. They're going to have to take a decision at some stage. I think they have actually taken the decision to basically, refocus their future into the Turkic nations in Central Asia. So there's that one. And another interesting one is Nigeria, which again is a very large economy with large oil reserves and all the rest of it. There are a few minor ones in there, like Uganda, for example, which, it's sort of going to be a communications hub into the Congo, so far as I can see. So what we're now looking at, I think, if you include these partner nations, we're going to be looking at something like almost 70% of the global population in Brics.
Huge.
And on a purchasing power parity, we're going to be looking well over 50% of global GDP.
What do you think of today's show? Do you agree with Macleod's insights on the potential shifts in global finance and the role of gold and silver as safe assets? Alasdair highlighted concerns around the dollar's stability, the rising influence of Brics nations, and why precious metals might offer a crucial hedge against currency devaluation. Let us know your thoughts in the comments, and check this video right here because it's a perfect fit for you. I'll see you on the other side.